All right, everyone, good evening. Today is November 3rd, Election Day, and I'm very excited to be talking about the events of the markets. To kick things off, let's talk about Ant Financial. Their IPO was halted. This is something we've been speaking about back when it was planned to happen on Thursday over the last couple weeks. However, this will now not be happening due to changes in Chinese regulation. Ant Financial is the largest payments business in the world and represents Alipay, which underpins copious amounts of transactions in China. They did about $17 trillion of top line revenue in the first half of 2020, which substantially outstripped the revenue streams from Visa and MasterCard. The PBOC and China's banking regulators met with Jack Ma on Monday to discuss new draft regulations relating to online lending. A big source of their revenue is doing micro lending, which is problematic given the indebtedness of the country already. So Ant will cap loans at about RMB 300,000, which is the equivalent of $44,000 in USD, or 1/3 of the borrower's annual pay. So the idea is to prevent excessive leverage in the shadow banking system. This will probably, not surprisingly, affect the bottom line of the company. And because of the impressive scope of this deal, bankers are losing a whopping $400 million in fees. This is something where, obviously, we've spoken about the dual listing structure, where we had the Star Exchange in Shanghai taking on about $17.2 billion. And then the other half was going to be listed in Hong Kong. So this $34 billion IPO will not be happening. Because of Alibaba's huge stake, they were down about 8.1% on the news, pretty substantial. And Jack Ma himself fell about $3 billion in his personal net worth. So big jumps there, all because of this regulatory capital change relating to the shadow banking system more broadly. All right, NVIDIA, second story we want to touch on before we dive into markets. I'm switching it up today. The ARM acquisition has been threatened. Mr. Wu has been voted out, and he led the local joint venture with ARM China, which controls about 17% of its shares. And because he has been voted out by a 7-1 verdict, he was voted out by a 7-1 verdict because of accusations of conflicts of interest. So he has this independent fund. This has been disclosed the entire time, but for some reason, this is arising now as this major deal, this $40 billion US dollar acquisition is likely to go through. It was announced a couple of weeks ago. ARM's current owner, the Japanese group SoftBank, put Eric Chen in charge of the Chinese business and will also be negotiating an exit package for Mr. Wu, who's likely to get a massive payday of somewhere between $100 and $200 million. Some rumors said that Mr. Wu was going to leave at the end of the month, while other people said that Mr. Wu was telling other colleagues that his departure was not guaranteed. So that is up in the air. The reason that this is really important is ARM's intellectual property prowess is underpinning almost every mobile phone chip designed in the country of China. And so with this in mind, it looks like there's about a 50-50 chance of the deal going through. And again, this is massive and has the potential to shape the business. We've seen M&A really accelerate in the last few months between the dearth of the COVID crisis and the election because people are worried about instability ahead. And that's one thing that we saw in markets today. We look like we are ready for the election, which is currently underway right now, with Trump winning quite a few states already. Biden also winning Vermont. We see that markets showed both stocks and yields rise, so bonds falling, with investors anticipating a Democratic win. Going into tonight, we saw futures up across the board. However, in the last about hour or so, we've actually turned negative. Just looking up, we were down 30 basis points on the Dow and 15 basis points on the S&P 500 on the futures for tomorrow's trading. This does show the increased likelihood of a Republican victory, or even worse, some sort of unknown outcome. And that's what we really want to avoid here. So Trump has already won Indiana, Kentucky, and West Virginia, and it looks like just Tennessee as of about a minute ago. And Biden has won Vermont and Rhode Island. Obviously, this is a currently occurring situation, so we'll stay tuned for more detail there. As the big story of the day, we have seen 100 million early votes and turnout heading to a new record. However, though, we have seen lawsuits already start. Personally, this has been something that I've been thinking will occur. I think it's unlikely that we'll see a clean line drawn at the end of the night tonight, as lawsuits have already started across the country. Pennsylvania Republicans have sued alleging early vote counting, and also most drive-through voting facilities are now closed in Houston on election day following a legal fight. So there's all these disputes that are likely to occur and unlikely to give us a solid answer, which is something that financial markets are very much wary of. Also in the markets, should mention the dollar dropped the most in more than 3 weeks, down about 50 basis points in the Bloomberg Spot Index. We saw oil further extending the gains from Monday, with WTI up about 2.4% to 38.54 rather, and Brent up about 84 cents to 2.2% to 39.81. Something interesting is that the API, the American Petroleum Institute, reported late tonight, just about half an hour ago, that U.S. crude supplies had declined by about 8 million barrels over the last week. Gasoline stockpiles, however, rose by nearly 2.5 billion barrels, and distillate inventories were down by about half a billion barrels rather. So gold was up about 30 basis points to 19.15 in the spot markets, and EM currencies gained broadly across the board on the likelihood of more stimulus. So we saw markets trading today on the likelihood and thought of a possible blue wave. Yen fell about 20 basis points to 104.65 per dollar, and offshore yuan in China traded about 666 per dollar, up about 30 basis points. The euro also bought $117. So that's $1.17, which puts it up about 30 basis points. So we see futures down. Obviously, will be a very interesting night ahead of us. So we look forward to staying tuned and seeing where things go. All right, let's talk about something completely different. Oil and Libya. Surging Libyan oil output nears 1 billion barrels a day. Obviously, on the chart on the left, we see that we are currently at 800,000 barrels a day. As mentioned previously, there's a whole situation here amid the civil unrest and the civil war. Libya was pumping about 100,000 barrels a day in early September. OPEC, not surprisingly, given the supply constraints that they're initiating, does not want Libya to produce oil. However, Libya is an OPEC member, but will still do what they want and does decide that they want to produce more oil. So they are doing that right now. Brent crude has been down about 10% since Libya was producing 100,000 barrels a day back in September. So we see Brent crude at that $37.50 level. Extra Libyan barrels are flooding the market and essentially proving as a headache to OPEC because of this eternal strife, which is preventing it from having to adhere to the supply cuts of the broader group. The chairman is targeting about 1.3 million barrels a day by early 2021 and 1.6 million barrels a day by late 2021 and early 2022. And so this is concentrated in 2 oil fields within Libya. So the biggest one is something called Shahara in the west. It will rise to 245,000 barrels a day by this week. And they are also targeting 300,000 barrels a day by the end of the year. The other major oil field in the country is called Waha, which is one of Libya's biggest, and did resume production on Saturday. All right, let me grab a sip of water and run through 6 stories. All right. So Prudential Financial posted a surprising earnings beat. It's one of the first insurance earnings to be reported. They reported a 5% profit increase to $1.49 billion US. The firm has already cut $125 million out of the $140 million cost-cutting goal for full year 2020. So they're making good progress there. Obviously, this is an insurance company, so they make money by investing in securities, public securities, private securities, whatever, but they're looking for that rate of return and seeing that we are in a global easing cycle right now and rates are just so low across the board. It's hard for them to get to that rate of return, which is one of the reasons that insurance companies more broadly have been struggling. In terms of cost cutting, they do also plan to slash an additional 250 million by the end of 2023 and a whopping 750 million in total cuts. They are also repricing products to go through these cost-cutting initiatives and pivoting into things that are less rate sensitive, obviously staying very duration hedged, which means that they are not as exposed to changes in or parallel shifts in the yield curve more broadly. They have taken also further measures to rotate out of an earnings mix and towards higher growth markets, which is really important given this low rate environment. And the AUM increased about 8.5% to 1.6 trillion US dollars. And this brings the investment management assets under management to a record high. Shares were up about 3% on the great news there. AMC. So there are two stories I want to talk about here. Firstly, on Monday, there was a report that came out that said they may issue shares. They're thinking of selling and filed with the SEC that they were going to sell about $20 million worth of Class A shares to raise, or 20 million units of Class A shares to raise 50 million US dollars in the effort to start off bankruptcy. Heading into the pandemic, AMC already had huge amounts of debt, about 5 billion US dollars, and earnings today on Tuesday helped the stock rise about 2% following this 7% drop on the news on Monday. This is the world's largest cinema chain, not surprisingly, incredibly affected by the dire situation caused by the public health crisis. Not only are people not going to movies, movie producers are no longer making movies that they were going to have released at the end of the year. So we see huge delays across the board, which really hurts AMC's bottom line. Only 540 of the 600 theaters owned by AMC have been reopened, and talks continue with more than a dozen strategic investors so that they can help look for funding. Last month, the firm did make a statement warning investors that because of its dwindling cash pile and obviously lower revenue streams, they are possibly considering filing for Chapter 11 bankruptcy. This is not very surprising. Heading into the pandemic, again, AMC already had these huge amounts of debt. However, on the news, the stock was up about 2% today. All right, pivoting back to China, Royal Dutch Shell acquired full control of the Chinese gas station joint venture. Chongqing Douyin is said to sell about a 51% stake for $150 million. This is basically a lot of gas stations in the Chongqing city area. This will give Royal Dutch Shell full control of the entity. They already had that 49% stake and are now filling it out. The oil major paid about 1 billion yuan, which is also 149 million, for 51% of the joint venture. This is for 41 gas stations in Chongqing, and this venture reported a net income of 155 million yuan in 2017. In addition, China lifted restrictions on foreign investment in gas stations in 2018, which scraped a rule that Chinese partners must hold a majority stake in the entity if there are more than 30 outlets. So this has opened the universe of investors to include more foreign voices and more foreign dollars. All right, so moving on, continuing in China, Meituan is considering doing a secondary listing back on the mainland. They're currently listed in Hong Kong and are considering expanding into Shenzhen's Chinex exchange. This is a NASDAQ-style board similar to Shanghai's Star Exchange. Meituan has raised about 4.2 billion in the Hong Kong IPO in 2018, and shares were up about 2.7% on the news. This comes after being up more than 300% since the company became profitable. The market cap is equivalent to the USD 224.6 billion, which does make it the world's largest meal delivery service. They are backed by Tencent and have had initial discussions with advisors for the potential share offering in China on the mainland. All right. Next one up, Aramco, the oil giant in Saudi Arabia, has kept their dividend amid a 45% slump in profit. The Saudi firm is going to pay shareholders the $18.75 billion that they had promised for the quarter, which does keep it unchanged and maintain their target of paying 75 billion US dollars annually in dividends. Free cash flow, not surprisingly, took a massive hit given low oil prices. I mean, we opened up the year trading near 80, and now we're sub 40 across the board. So free cash flow was down to 12.4 billion this quarter, down from 20.6 billion the same quarter a year prior. Aramco's total payments to the kingdom, including both taxes and royalties, fell about 30% in 3 months to the end of September to 24.6 billion US dollars. The government needs the money to help cover its budget deficit, but does want to stick to its promise right now, and will be continuing to pay that dividend. And something interesting about Aramco in particular is starting off the year, they actually had negative leverage, which means that their gearing was negative, which literally means that they had more cash than debt on their balance sheets. This means that their leverage has now widened to 22% from 20% in June, and that comes off being negative 5% in March. This is further from their leverage target of between 5 and 15%, which obviously is not good for holders of the equity, which are subordinated in the capital structure to those debt holders. Aramco also drew down a 10 billion US dollar loan in late July, and this revolving credit facility matures in May 2021. Their downstream business in particular was particularly hard hit as the unit earned a $795 million net loss before interest and taxes in the third quarter, coming off of an $800 million profit just a year prior. Refining capacity is strong, running about 6 billion US dollars. 6 billion barrels a day. However, they're still targeting upper end of the range between 8 and 10 billion barrels a day. So we see that shift upwards. Again, this is amid an environment characterized by oil prices trading above or even sub 40, which is pretty concerning. All right, one more thing to talk about. Stonepeak is to buy TPG's cable unit Astound for about $8.1 billion. This is an enterprise value, which means it does include debt. Stonepeak preempted the auction and beat Blackstone and I Squared. Beating Blackstone is particularly interesting because one of the co-founders, Trent Vichy, who happens to be about to leave, is a former Blackstone infra group head. So we see connections there. Stonepeak is partway through raising their $10 billion fourth fund and has already amassed $6 billion for a first close in June, which is a part of the funds that they're going to be using to make this acquisition here. Obviously, they do a lot of LBOs. It is a very typical private equity fund in that regard. And Astound, on the other side of the table, is a big cable company. It competes with bigger rivals such as Comcast or Charter, and is the 6th largest U.S. cable and broadband provider. This $8 billion deal would value the company at about $8,000 per broadband subscriber, which is about similar to one of their biggest competitors, Charter Communications. JP Morgan Chase and Morgan Stanley advised Astound, while Stonepeak was advised by Bank of America and Lazard. All right, well, we do have a lot to watch, and in the meantime, definitely look forward to seeing you Thursday night. Other than the election results, we do see EIA crude oil inventory reports coming out tomorrow, and the Federal Reserve meeting on Thursday. This FOMC meeting is pretty interesting amid the political turmoil. However, the Fed is generally highly adverse to commenting on political developments. However, it is pretty likely that if something bad is to arise, they are going to shore up instability. Obviously, they can do this by making purchases, continuing quantitative easing. They're running at about $80 billion a month. So they can continue to make purchases with US Treasury bills, bonds, and notes, so across the whole duration spectrum. And in the mortgage-backed security markets, I guess, in corporate credit, in investment grade, and fallen angels as well. Just as a refresh, the 10-year Treasury yield now hovers around its highest level since June, climbing from below 70 basis points. I remember we reported running about 68 basis points at the start of September. We're already up to a little bit above 85 basis points. We had a big 5 basis point jump today, and the 30-year note has edged about 20 basis points higher in that same time period. Also, the spread between the 5 and the 30 is incredibly steep, and the steepest we've seen since 2016. On Friday, we also see the US non-farm payroll report. And in the meantime, we also have earnings from a couple key companies like Alibaba, which is down 9.3% this morning after the incidents with Ant Financial. And AstraZeneca, again, a big company in talks to make a vaccine, as well as Nintendo, Macquarie, and Toyota. So a lot to stay tuned for. Looking forward to seeing you Thursday, and best of luck with everything in the meantime.